Good morning, everyone. Welcome to Admiral Markets. My name is Chris. We are going to take a look at the trading room here, which is live. This is the 2nd of October. And we're going to take a look, therefore, at technical analysis, my trading, my setups, and analysis. So thanks for joining. If you are new in here, by any chance, let me know, because it's always quite useful with certain explanations, certain concepts. I might go into a bit deeper. If you have any questions, of course, please feel free to use the chat. And that's always useful if you let me know, because certain things are done without maybe explanation, because we've been running this room, of course, for quite a while. So that's the good thing. Disclaimer, very important to note that this webinar is intended for a global audience. Please take into account that this may not be suitable for everyone. To get the corresponding info on this session, conditions, and other details, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk, and it therefore may not be suitable for all investors and traders. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice, and the webinar is for informational and educational purposes only. And you can always ask for this disclaimer and at the admiralmarketsglobal.com website, and contact the appropriate entity. And by continuing watching this webinar, you agree with the disclaimer mentioned here. All right, thank you for your attention. We're going to take a look today specifically at price action at pivot points. Usually speaking, that doesn't take all too long to go through like 10 pairs with this particular strategy, so we'll probably have some time left. And I will take a look at what we can do. Maybe look at a blank chart and just look at trend lines and chart patterns, for instance. It's up to you. If you have a preference, let me know. We will, though, whatever the focus is, kind of use this as a model to identify and analyze the market. Always looking at the trend, opportunity, filters, trigger, and entry method are the very important concepts to consider. Make sure to take a look at Admiral Markets in social media. And with that said, before we finally head over to the charts there, thanks for your patience. And let's take a look. We got some news events here. The second, we had pound PMI coming up. And of course, the big event for the euro is the euro interest rate decision and the ECB press conference. Now, my personal rule of thumb, or actually rule purely simple, is the fact that if there is an interest rate decision for a currency pair, or currency I should say, then I would not trade that currency. So I'm going to, of course, stick to that rule, and therefore I'm not trading the euro today. No new positions will be opened on the euro today for me, unless, of course, well, maybe I don't know, a few hours after this ECB. That's something else. But I mean, prior to it, it would be for any particular pair currency. It could be the pound interest, it could be the Aussie interest. That's my rule of thumb. So, but there are other pairs out there as well. First of all, we're going to take a look at the pivot point element. So let me take a look at the euro dollar with you, and like to take a look at the pivot points on an hourly chart here with you. And basically we had some spike up early this morning. It was really early. It was like midnight, halfway, or not midnight, but halfway the night for Europe. So it was a bit surprising to see the euro dollar move up so much in an Asian session. I saw that happening live. I was a bit surprised. 50, 40, 50 pips up, quite a lot. Now moving down just as fast. Probably some profit taking, I would imagine, considering the euro interest rate. Of course, that wouldn't necessarily expect any change now, but still, you never know. And probably some traders grabbing some profit after this sprint up. Why? Because, well, the currency is in a downtrend, as we see. And if you were looking at the charts in Asian session, then this could have been an example of a price action at pivot point. It's an ideal example, in fact. There is a wick here, a shooting star at the daily R2. Well, our topic of the day is price action at pivot points. So that's an ideal example if you were able to take that trade due to the euro interest rate. So that is up to you. But this is an ideal example, or yeah, pretty good example at least. Maybe the shooting star isn't perfect, but there is a bit of a wick at the daily R2. So these kind of things, the strategy is looking for, basically looking for price action at pivot points. Now that could be a rejection, such as this one, for instance. It could be a break too. Price action doesn't necessarily always mean rejection. It could be a break. It means basically a break or bounce spot at a daily pivot, or at pivot points. So we are now reaching and approaching the daily pivot. That could be a bounce or break spot, for instance. So if price manages to break below the daily pivot, that could be maybe the breakout trade. Personally, I wouldn't just jump in as soon as it reaches the daily pivot. I want to see price actually, with breaks it's a bit different. With rejections, I'm looking for candlestick patterns like a shooting star at a pivot point. But with breaks it's a bit different, because as soon as price hits the daily, doesn't mean I would want to jump in, because there's a chance price could bounce off the daily as well, right? So that's something we have to be careful of. When we look at bounce and breaks of pivot points, we can look at that from both directions. This could be a break, but also we could look at it from a bouncing point of view. So this is where trend comes into play, because how do you look at it? Do you see it as a bounce or break spot? Right? We could look at it both ways. This is where intraday trends / longer medium trends maybe start to come into play as an extra benefit or important factor when trading price action at pivot points. This wick, shooting star at the daily R2, in theory was good. Why? Well, because we're in a downtrend on the euro dollar. Why? Because if you put an EMAs on, if you put 21 EMA, let's strip the band just to make it simple, not to overcrowd the chart. Let's take the band away and just put the 89 and 21 EMAs on the chart. What is the flow of price? Well, it's obviously down, right? 21 is below the 89. Most of the time price is below the 21 as well. And typically when price goes back to the moving averages, it's a retracement. So now it went back to the 89. That is why, in my opinion, a rejection at the daily R2 was worthwhile, but a bounce to the upside at the daily pivot point is something I would not be that interested in. Now, I'm not interested in the euro dollar at all, by the way, just to emphasize, but if it would be a normal day. Maybe you are interested, I don't know, it depends on you. So I'm not interested in a bounce at the daily pivot point. But if price breaks through it after bouncing, could be different. And that could merit an entry for a break to the downside, in my opinion. Other pivot points on this chart, weekly S1, price has stopped at the weekly S1. So if we break below the S1 and the daily pivot point, the next target would probably be daily S2, S3, or weekly S2, somewhere here around 125.30. Let's see, the first EMA is 21, EMA close indeed, and the purple one here is 89. As you know, I'm a big fan of Fibonacci sequence numbers. I'm a big fan of Fib numbers in trading, and also for my moving averages. Kalian, for instance, was looking for the daily R3, which 2 is a good level to think about. It didn't get there, unfortunately. But it was showing a lot of momentum, so I fully understand the reasoning that you thought that it could go that far. So let's take a look at the pound dollar. You see, it goes pretty fast when looking at pivot points. It's really doesn't require much time because it's just looking for price at pivot points. So, the analysis is maybe simpler than usual. It's maybe more straightforward than usual because I'm just going to go through all these pairs and say, okay, price is not at the pivot point or is at a pivot point. I'll be interested for that and that. So, if that gets boring, just tell me otherwise. But basically, we got a good confluence of weekly, monthly pivot point and daily R2 at the 160.90, 163 level. Obviously, if price gets up that high, it could be a good rejection zone. Not only that, we just have some classical things to think about as resistance here, the broken bottom, for instance. Right? That could be very interesting. Will price get there? No idea. But it actually bounced off the R1. Now, why the euro I thought was a better one because of the fact that it was at the R2 and because of the fact that price here in this although it's in a downtrend, it's been not as aggressive. It's been quite choppy in its movement. Why do I say that? Just because look to the left. Look at price to the left here. It's all going sideways. Yeah, that's true, Björn. I was focusing on pivots, but Camarillo is also a pivot point, so actually we can look at the pivot point, Camarillo indicator as well. Good point. So let me zoom. Let's go back and take a look at the 50-minute chart. You can see that the euro dollar was very close to the H5 here, and I've said this before, remember, like if you're in a downtrend and when price gets to the H4, H5, those are sometimes good moments to think about shorts. So for the euro dollar breakout, we're looking for price to get into that L3, L4 zone and break below it. Now, the thing is that because it already made a pretty decent sprint to the downside here, notice the difference I will have when treating price when it reaches L3, L4. The difference between price like tumbling down here or when price is kind of stuck between the H3 and H4, here I'll make a drawing example. H3, L3, that's just a hypothetical example. When price is stuck between those H3s and L3s, right? Or when price is tumbling from H5 down to L3. I treat them differently, and the reason is because it already fell, the euro dollar fell already. When it tumbles from H5 to L3, it fell like 70 pips in this case. Well, 70 pips is quite a lot of price action. So when it gets into the L3 zone, I don't want to short it, right when it gets into the L3 zone because it already fell 70 pips. So I want to see that bounce at that point. I want to see price hit the L3 or L4 zone there, make a bounce, and then if it breaks and continues, that's okay. But if it's in the H3 L3 zone, I'm a bit less worried about the fact that the price is going through the L3, for instance. That is actually a good moment to step in. So small difference there. Looking at the 15-minute chart, we see price here at H4 as well, but the pound dollar 2 needs to break below the L3 here before we really can get some action. That's probably about the same as this bottom, roughly the same as this bottom. So not touching it really until that cracks. Also the pound, could be slow today maybe because of the euro. Dollar Swissie has made a downside too, but didn't go as deep as the euro dollar. It too bouncing off L4. It too in a trend, an uptrend, a dollar trend to the upside. It too bouncing off pivot points. So it seems like we had a bunch of pivot point trade bounces on the dollar right a few hours ago. Now if we missed that, then this strategy becomes one where we have to have patience to wait for the next setup. Not always. If you have a specific strategy, then of course obviously you bump into the fact that your strategy sometimes you have to wait for your strategy to set up. If you're trading a discretionary, you can take a look, analyze, and you either take it or not, or you either put a pending order or not. With specific strategies, of course, you're waiting for some events to occur. So that event would be then, because the bounce at the L4 is missed, that event, because it's an uptrend, would be waiting for price to get into the H3, H4 zone, like the euro dollar, same story, and making it upside. And that, of course, happens sometimes, happened yesterday too, when you're looking at dollar pairs, and they have kind of that similar structure going on. Dollar yen had a big fall. Now I expected some fall, some retracement off the 110. I've been warning everyone 110, 110, 110. Watch out 110. So I expected some trouble, but I didn't expect such a big move down either. That surprised me. But we did have a bit of a rising wedge pattern, didn't we? If you look at the purple lines here, a typical chart pattern where the market shows some struggle. It also completed, for those that like elliott waves, for instance, 5 waves here within a rising wedge. So all kind of clues that at the 110 resistance level, all kind of clues that do convey to us that we should be careful with longs in any case. For those that like reversal trades, maybe even attempted a small short. The sheer impulse and momentum that came into the market did surprise me. I honestly thought we would just see a big sideways move like this and then a break. That was my expectation. It didn't happen. But yeah, it didn't really matter that much because I didn't trade anything in this zone, so it was just my thinking. Now with such a big impulse though, the thought automatically occurs whether this isn't going to be a bigger zigzag correction. Whether this isn't going to be some impulsive third leg still following it, right? Something like this. Definitely possible. Let's take a look at the bigger picture, and what we can see, let me take off that fib. Why is that possible? Because what could happen is that, this is very impulsive upside. Don't get me wrong. I do think that this is going to, personally, I do think that this is going to continue with this uptrend, just because the sheer momentum, the sheer push is too much, I think, to stop here as yet. But we could get a bigger retracement. How big? We could see part of the retracement of this leg. Maybe we can finish this massive impulse up. Maybe we can go back to, for instance, a 38.2 fib. Now, if we quickly, I know I'm sidetracking here from the pivot points, but just give me a second. If we quickly look at the wave analysis to get an idea what fib we want to place the fib on, we can see from this bottom, okay? Because that could be an entire wave completed. So that's what we want to fib as well. So if we do that, I think, let me check where that is exactly. That's from here, for instance. Then we could be seeing a retracement. Typically, a retracement goes back to the 23.6 or the 38.2 fib. They equal both have a bottom in play, a different extra support level as well. So 23.6 and 38.2 both seem to be a confluence spot where the trend could continue after a bounce. So if we then put a fib on that very first impulse, a zigzag on a bigger time frame would look something like this. Move up to 61.8 probably, then move down to one of these two targets, and then bounce from there. That's what I'm expecting. This upside would maybe create some smaller head and shoulders, and the break wouldn't probably go too far because then we would see already a bounce at support. That's my expectation. So let's put on the pivot point indicator at the moment and take a look on the hourly chart. What does that mean? That means that if price goes back to the daily pivot point, it could be indeed a good rejection level. Despite the fact that in theory this is still an uptrend, the swift momentum could mean that we get a rejection at the daily pivot point. And those are moments that I personally am okay with taking reversal trades when I see these things line up. Otherwise, before that, I never bother to do it. It's too much headache for me, to be honest. It's too much trying too much effort really to pinpoint the reversal or the first big retracement. It's just so much brain power goes there to compute what the most likely one is, and often it's still wrong anyhow because it still makes one more higher high. It's just annoying in my opinion. So that's my personal opinion in any case. Let's see. Kalian told me that we have weekly and monthly Camarillo levels as well. That's good to know. I actually would like to try that. Kalian saying that they're very much useful. Huh. So that sounds good because you can calculate averages of two levels. So I'll tell you next time then. Kalian's going to explain me how that works. That's really great. Thank you so much. You have my email address, right? I know, but I don't know. I'll just add it for your convenience maybe there quickly. So by the way, if you're enjoying these webinars and you like them and you think they are useful for you, I would really appreciate if you would share this webinar maybe with your trading buddy or with a friend who's thinking about Forex or something like that. That would be really nice because we would like to boost up the attendance. So if you really like these webinars, I mean, we would greatly appreciate it if you just ask one or two people or a couple of people that you know, and see if we can get more people in this room. Okay? So just wanted to quickly say that. Let's take a look now at the Aussie. Went all the way up to H5, big run up. We got a breakout earlier in the Asian session. This is one of those price action at pivot points scenarios where you're looking for a breakout. Why is that? Because the 20 to the upside. Why is that? Because the 21, first of all, crossed the 89 here. We are getting a triangle like this. And with the 21 above the 89, once price starts to, with the bullish moving averages of the 21, when price then starts to break here, it is a good breakout. Or if not that one, then this one here with the fractal that's hitting the H3. Because then the moving averages have a very good steep angled, although of course the more we zoom in, the less steep it looks like, but good angled moving average. And that was a good breakout from 87.55 up to 88 something. Now, don't get me wrong, that breakout though is a bit of a reversal breakout. But there is a slight difference with that one. It is the fact that we have a good resistance line. It's the fact that price is above the 21 EMA 1 hour, and price is breaking above the 89 EMA. You see, the difference here is that the 89 was very close to the 21. I know it's a slight difference here. Whereas the 21 here was far. When price broke above the 21 EMA, notice something. It was far from 89, wasn't it? Here, it was almost flat. It was almost, they were very close to each other. So there's a slight difference. Still, if you didn't like that particular breakout, there's nothing wrong with skipping it, by the way. However, at the moment, past is past. That was a good breakout earlier today in the Asian session. Now we've arrived to this scenario. The price has reached that weekly pivot point. And I think it's a good short. There is engulfing twins at the weekly, at the daily R2. Obviously, if you took it a bit higher, better for you. Looks like you would be up 25 pips, 28, max 30. But still doesn't mean it's not a good short here, because it is a good candle. So there are a few ways of trading it. One could trade the retracement of that candle. One could trade the break of that low, or even just the close of the engulfing twin. Personally, I think it doesn't look bad in that regard. Let's take a look at 50-minute chart. Now, of course, one thing could happen is that this just goes very choppily to the downside like this. Then I definitely would advise to be careful and a big warning sign, because then it looks more like a bull flag, could break to the upside. Then you want to be careful. Shorts, I mean, stop losses, in my opinion, would be straightforward, would just be above this high. I don't think there's any reason to put it differently in this case, in my humble opinion. That's what I do in these cases when I see the reaction clearly. I don't think it makes sense to go anywhere tighter than that. And we have to see if the downtrend can continue, basically, because price managed to bounce at the support level here of the weekly chart, and we don't know how much of a bounce it can get. It could be more than we think. That's one of the problems here, that price could actually do something like this up. This downside could happen, but it could go not too far before we see an upside. That's why I'm saying be careful if it's too much of a correction and price starts to bounce somewhere around the 50, 87, 40 level, the fifth that's halfway. Be careful, because it could do that. It could do this because of higher time frame confluence. So I'm not a fan of buying it at the daily pivot point, by the way, because of the downtrend, but shorting it here at the weekly pivot point makes sense, but with caution of the higher time frames. And the fact that it could make a reversal, or sorry, a retracement, I should say, on a 4-hour and daily. Alrighty, so Kiwi 4-hour chart, let's take a look. Same story, I guess, as all the other dollars, so really nothing new to add. It just missed the weekly and monthly pivot point. That would have been pretty cool if it would have touched it. You know, how close can a candlestick pattern come to still saying it qualifies? That's always a bit of a question. Obviously, if it touches, that's the best scenario. How about if it misses the weekly pivot point and monthly pivot point by 1 pip? Well, 1 pip is okay, but how about 2 pips? I think 2 pips is okay, but how about 3? So where do you put the border? That's my point. And here it went up to 79.28, and prices at the pivot points are at 79.65. That's a gap of 36 points, obviously 36 pips. That's obviously too much. I tend to use a 4 or 5 pip rule roughly most of the time. More than that, and I still consider it a bit too much distance. So obviously 35, although it looks very close on this chart, it's a 35 pip difference. So I wouldn't have taken the shooting star here. If we zoom into the 15, it's still on the downtrend, same scenario as the Aussie. We had upside correction, but despite that, it looks bearish. But in this case, though, I would be waiting, just like the other dollar pairs, before taking it short. I would want to see, for instance, price break through at least the moving average here and get back below H3, because H3 could be obvious support still. Let's take a look at maybe some non-dollar pairs, because they all look the same, and I don't want to bore you with these dollar pairs. By the way, dollar CAD, just the very last dollar one, then also made that same kind of sprint down. This one is also pretty choppy, but did have a great example yet again here with kind of a hammer here at the weekly, monthly, and S3. Good example of price action at pivot points. All right, now we can move on to the Euro Yen. The Euro Yen was a short I took yesterday, by the way, made 50 pips on it, although if I would have trail stopped it, in fact, I could have gotten 80 pips out of it. I took a short somewhere in here. Now, just a quick recap, why did I take a short there, by the way, was the fact that we were in a downtrend, we broke, pulled back, broke again. This looked like a pullback continued. We had 21 crossing the 89 EMA. We had, yeah, all the other previous things mentioned already. So this looked like a classical scenario, a good momentum here of momentum, correction, and follow through. Seen this, well, thousands of times to be honest, something like this. So when you see that often, of course, you'll get more confidence in certain setups. And I was waiting for about 2 hours before it really started to fall, but didn't really have any problems with staying in that long because because I had confidence in this structure and setup. Yeah, that worked nicely. The price stayed below the 21 band. Now is in between the H3 and L3 zone. Let's take a look at the hourly. Well, there's, to be honest, I don't think there's really much reason for this bearishness to stop, as far as I can see. No obvious reason, at least at the moment. And I mean, looking at this, a spike up to the daily pivot point, for instance, right in here, let me put a line there, could be an interesting level to think about if it gets up to H3 as a rejection, H4, 2. But if it doesn't get there, then let's take a look. Yeah, breakout seems to be okay. We do have a weekly S2, so maybe something to be a bit concerned about is the fact that we already hit the weekly S2. So this has traveled already pretty substantially, but already. So that's something to be maybe a bit cautious of on the euro yen, to be honest. But I think you get the point in any case of our focus today. So, you know, this is going to be quite repetitive because it's just the same things looking for, and strategies, of course, can have that repetitiveness, you know, when you're just looking and keeping an eye on something and then just trading that. In fact, trading itself should be repetitive, should be quite non-exciting in a way, because to a certain degree, because yeah, it's just following the plan, isn't it? Analysis, in my opinion, is more exciting because you know you're looking at, it's more flexible and you're looking at a lot of different things. Let's see, you got a question here. How do you calculate the Camarillo levels? Well, actually, the Camarillo levels are automatically calculated. How they are calculated, I would have to look up. I really, unfortunately, at the moment, I'm blank. But it has to do with, I think it has to do with other pivot points that are then divided by 2. Let's try to look it up. Let's see here. Definition of Camarillo, it says R4, but I don't have any R4. I only have R3. I have different numbers, by the way. Well, now, it says here C, closing price plus range, times 1.5 times 1/4, 1/6, 1/12. So it's basically taking closing prices and ranges into account, according to this website. Alrighty, so pound yen, same story, looks bearish too, just looking for a break to the downside. What would be a good entry? Let's take a look. We got a monthly pivot point, so here I would be more cautious. Let's see if the euro odd is a bit better. And euro odd does look better, in fact. Broke out of that channel. Pretty close to that L5. Let's see. Let me check it with the pound odd quickly. These do have nice momentum to the upside. The only tricky thing about them is that there is still some lingering support because of the big uptrend. So price has also gone through the L4 already and pushed through that. It still hasn't reached the L5 though. So I would probably only be interested if it makes a bigger retrace at the moment. If it makes a retrace back to, for instance, this bottom here for more downside. That seems probably the only, at the moment, I would be waiting for that. Regarding pivot points, let's take a look. Nothing really there, nothing really here either, unless we really get higher. That would be a very interesting level, though, if it does get up as far as here, which it could do if tomorrow, maybe for instance, or even today with the euro interest rate. So if it gets up that high, that could be a level of resistance to be aware of on the euro odd. So this kind of thing is what you should be thinking of with pivot points, basically. I think the Aussie at the moment looks the most interesting. And the dollar cat probably was the best one in the past, the most recent hours. And so that's my view on price action and pivot points. So as I told you, it should be probably a bit faster with this view than with other things, so we can take a look at different stuff. Didn't see any preference, so I'm going to show you, let's take a look at chart patterns and trend lines on blank charts here, relatively blank charts. Let's change the view. And this is the daily downside. It's really accelerating here. Really following through on that downtrend, uptrend on the dollar. And there's just a massive impulse here. It's really not even possible to put a trend line on it. Now on the 4-hour, we can actually finally put some channel on it. And we do see that price yesterday was at the bottom of that channel, by the way. Interesting. Price bounced off of that channel. And there is some lingering divergence between these bottoms here on the euro dollar. Now with divergence, we know that price typically, with divergence, on average, goes back to the 136, no, 144 EMA. 144 is all the way up here, 128.88. So that's how far it could go. Let's put a line there. What else is there? Let's take a look at the daily chart. What else is at that spot? A 23.6 fib as well. So price could retrace up to the 23.6, for instance, max to 38.2 probably. But it would have to break out of this downtrend channel. So we'll have to see. Obviously, it's still in a downtrend, so there's no guarantee that price will get up there as yet, because one of the difficult things about reversals is the fact that we don't know when that divergence will kick in. It has been already having divergence for a while, please, for a while. So now if we put trend lines on like this, you can see we had a break here. We're still waiting for this break. That would be the signal if you're using trend lines. This lower line would be the signal for down. Maybe in the Asian session, the break of this resistance line was a good signal for upside trade, but you can see that price didn't manage to break above this resistance. This is how you can use all kind of trend lines basically to your advantage when trading. Even broken trend lines sometimes help as well. So pound dollar, that would be it. Basically how you can use the fact that, if you wouldn't be looking at pivot points, you would still have a resistance line coming in here, right? So when you then look at the 30 or 50-minute chart, you see, oh, okay, it's breaking this trend line. The next trend line is here. This is the space for downside. And if this trend line here, I'm looking for a break below that. That's how one could do it with trend lines. Let's take a look at the pound odd. Pound odd 1-hour chart has a lot of trend lines. In fact, we can draw something like this. We can see there's resistance here. A failed attempt to break to the upside. Right there, we had a ton of trend lines here. Those were all broken. As you can see, this is broken. this broken and hook back to trend line here, trend line here, and you can see, there's a lot of resistance still above us here that price wasn't able to fight against, right? When it was moving up, it still hit a lot of resistance. So clearly we need to break out of that resistance before you can get into more of a long territory. We're still more in a short territory because of the momentum to the downside here, the trend to the downside. So therefore, break below this support would be technically a break to the downside. For our chart, not really much to add. Maybe a trend line like this, for instance. Or a trend line like this. And we see some bigger resistance higher, right? So if we were to break this, then we can see the green dot, then you can see that the next resistance zone is somewhere in here with the red dot. That's how you can use trend lines. You can draw a lot of trend lines, but you want to be careful, of course, that the trend lines you draw are relevant, not that they're way out of reach. I mean, if you draw a trend like that, it's great, but it's now not so relevant. Broken trend lines can still stay relevant because they could warn you of a previous break, or they could be used as a support or resistance in the future. So they sometimes stay relevant as long as they're still close to price. Of course, we want to see preferably 3 or more touches because that's when a trend line gets confirmed. With 2 lines, it's only just a potential trend line in a way. We want to see a trend line with a good space distance between the number of hits. So what I mean with that is, for instance, here if you have a candle here and a candle here, and you draw a trend line like that, and they're right next to each other, those candles, that's not a trend line. That's not 2 hits, that's 1 hit. Those 2 candles form 1 hit. Only when after that we get another hit with a decent number of candles in between would it count as a next hit. I mean, you cannot say candle, 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 and put a trend line like that. No, that's 5 hits. Right? So, what else? I have a feeling I'm forgetting something. Just doesn't pop up in my mind. Let's see. This is not a rule of thumb. It's not a rule, but it is a good guideline. I mean, in the sense that the angle of the trend line obviously would give us some indication of the momentum or correctiveness of the structure. Drawing multiple trend lines is good because you get a zone. Sometimes, for instance, you draw this trend line, but drawing this trend line is just as good. So keeping both on is okay because you get that zone kind of area. Also, cutting through certain candles is okay as long as you don't cut and put a total candle outside on the opposite end. But if you cut through a bit of a wick or the wick itself, or wicks even, that's fine as long as there's an advantage of doing so. Most of the time you get more touches by cutting through wicks or even part of the candle. That's okay. But I don't leave entire candles outside of the market. All right. So, some quick rules there for trend lines that you want to keep an eye on. Let's see, dollar. Let's take a look at, does anyone have a particular pair in mind? Let's see, Bob says gold, and Killian has a question actually on dollar CAD. So before I continue with trend lines, let's take a look at those two and let me know if you have a specific pair in mind. TP on the dollar CAD, let's take a look. TP on the dollar CAD. How much is your risk, in fact? Because that's a good, that I probably have to need. Oh, entries at 108.30. But what is the stop loss? 108.30. 108.30. Oh, that's way lower. Let's see. Yeah, if the price gets there, it would be good because there's a weekly level here, a weekly support level at 108.08. Let me check that. 108.10. So if you put the stop loss below 108, that's a technically sound, I should say, technically sound stop loss. Nothing is ever 100% safe, obviously. Oh, you took the entry already at 108.30. Ah, sorry about that. That's okay. So that changes the story. Sorry. Let's see. Let's put fibs on this upside. Well, we are getting close to this resistance. So in a way, we are already worried, or kind of are in a take profit zone, to be honest. It hit the minus 618 target here of this daily fib. So that is already, you are already in a zone where some might be thinking about taking profit, to be very honest. But if you want to live through one more retracement, which is happening now, and that makes sense, but that necessarily doesn't have to be the end of here, the uptrend. But it would require, if you aim for anything higher, that price breaks through this resistance spot. Let's see. Price would have to go through this target, this top, excuse me, and the minus 272 target at 113.20 would be the next one then. If we put fibs, yeah, it depends on what time frame you're looking at, in fact. But you can put fibs on this upside, of course, as well. And let's take a look. Looks like that has, at the moment, probably the same target in mind by that 113.20 area. But there is a big resistance spot right there. So, it might even be wise just to go right in front of that target, maybe at 112.40, 50, before that resistance spot. Depends, of course, how much. I mean, both are potentials, certainly. Depends on how much you want to live through and how much patience you want to have. Okay, cool. Great, so fingers crossed. And let's see, gold. Let's see, Bob is asking gold, I think, yes. It didn't break to the downside. I had this trend line here. It didn't break below that, so that made that upside hit the H4, which normally speaking in a downtrend would be a rejection potential. And we're at the weekly pivot point as well, but it is a very choppy movement at the moment. On the hourly, 4 hours still pretty established in that downtrend. So if you look at the 4-hour downtrend and you see price at the weekly pivot point, could be something to think about as well as a good example of price action at pivot point. At the moment, though, the hourly is pretty choppy. is sideways. So I would definitely have to see price at least try to challenge and break below the L3 if anything at the moment for downside. That's the only thing I can think of that would make sense on an XAU-USD. From a longer term perspective, it looks like we are in a big triangle, and price has not managed as yet to really break out of that bigger consolidation. Maybe break out of this trend line here where I have the green, but the bigger consolidation, not yet. XAG did manage to break. More pressure on silver than on gold, and silver has dipped below 17 in the meantime. CAD Swiss, I don't think I have CAD Swiss, unfortunately. Sorry about that. So I think that would actually wrap things up. Once again, if you like these webinars, please share it with others. Otherwise, we might the formula might change. Maybe we'll have to have less webinars if the interest is not high enough. So, if you like these webinars, then with the live trading here, inform your friends or something like that, and let them join. So we got more participants. We'll be back tonight. New Zealand, yeah, we can take a look at New Zealand yen, certainly. Let me just quickly show you tonight. We will have new methods on using support and resistance to the max. New Zealand yen, let me take a look. Here it is. Oh yeah, I remember we were saying New Zealand yen. I remember this. New Zealand yen, I think it was somewhere in here at 85.70 or something like that. I said, well, this could be a retracement of the breakout. I said I wasn't going to trade it, but it did look like momentum, bear flag, momentum, break of the bottom, and this looked like a break of the bottom followed by a hook back to the bottom for more downside. So a short somewhere at the blue line made sense to me, I remember. That seemed to work out okay. We did get indeed the downside from here, break, but look at that, wow. A big turnaround, a U to the upside, bit unexpected. And that can happen sometimes. Price can respect certain resistance zones and support zones, but it doesn't mean there's always a follow-through, and definitely no follow-through on the New Zealand yen here to the upside. So now I don't know, to be honest. It looks a bit wacky because of that. So I think that I would be more cautious. Obviously, still looks like a break of the rising wedge here, but the break is not happening with a very tremendous amount of thrust as yet, getting a kickback already pretty soon. So in that regard, I'll probably still be a bit cautious. Maybe we'll just get a bigger correction of this swing. For instance, to the 50 fib. It hit the 38.2 fib just recently. It still looks bearish to me. I wouldn't change that. This is still a pretty good swing high, swing low, pretty momentum. So I wouldn't change that, but at the moment I wouldn't be trading it. I mean, if anyone isn't that short, I'd probably recommend just to take it off for around break even at this moment, I guess, and just wait and see, to be honest, and see how much for correction we get. How does this correction look like, and where do we see price action signals that it will bounce and move back down? Or who knows, maybe it starts to do this. Well, then if it makes one more upshot like that and then starts to go sideways like this and make a bull flag, then you have to mentally already be aware that this could be upside in fact, and this could be making a channel to the upside, and prices, this downside is just a correction, and we could be making this again. The moment I would consider that would be an establishment of at least a base of a trend channel to the upside, plus I would need to see, and then therefore also higher highs and higher lows, and I would need to see a break out of the downtrend line, and I preferably would like to see price above the 89 EMA. So it's still in a bearish sentiment, still in a bearish mode, but I would need price to show its color, true color here, and show its true direction, and give it a bit more time to judge if that is indeed likely, or if we're going to get more likelihood of a reversal. So that's my 2 cents on the Kiwi yen. So sorry if today is a bit shorter, but with the euro interest rate, all these euro pairs, and there are a lot of euro pairs I look at, are off the list for me. So makes things easier. Tomorrow I probably not trade at all, in fact, because if I remember correctly, it's NFP, and I always think that that's a good day to evaluate and take off myself, because it's trading every day. Eventually, I think it's a good day to it's a good policy to take maybe a day, maybe 2 days in a month, just maybe do something related to trading, but not necessarily trading. I don't know, evaluations or some reading about trading or learning about trading, just to get the mental refocus. I like to choose NFP days because anyhow, it's very fundamental, and I like technicals. So sometimes it follows technicals, but sometimes you get big spikes out of nothing. And so I think it's a good day. So that would be my plan. But in any case, wish you nice days ahead. Hope to see you tonight, and wish you all good trading if you do trade. Cheers.